The United States has been throwing everything at China, think tariffs, trade bans, tech restrictions, all to slam the brakes on Beijing's global ascent. But here's the big question, is it working? Or is China's momentum just too strong to stop? From its industrial juggernaut to its sprawling trade networks, China keeps powering forward. In this video, we'll break down 10 solid reasons why the US's economic war isn't enough to halt China's rise. This is a clash of titans reshaping the world economy, and we're diving deep into the how and why. If you're into geopolitics, economics, or just love a good showdown, stick around. Don't forget to smash that like button, subscribe if you haven't, and let's jump right in. Things are about to get intense. First up, let's talk about China's industrial dominance. It's the backbone of why the US can't stop its rise. China's the world's factory, pumping out 54% of global steel and over 80% of solar panels in 2023 alone. When the US slaps tariffs on Chinese goods, it jacks up prices for Americans, but China just pivots, selling to Asia, Africa, or Latin America instead. Decades of building supply chains mean it's got the scale and flexibility the US can only dream of right now. Sure, America's trying to bring manufacturing back home, but it's slow, lacking the workers and infrastructure China's mastered. Tech sanctions like those on Huawei hurt for a bit, but China's pouring billions into homegrown solutions. In 2024, its industrial output hit $5 trillion, dwarfing the US's $2.5 trillion. The economic war might dent China's profits, but its factories keep roaring. It's too entrenched to topple. Next, China's massive domestic market. It's a game changer. With 1.4 billion people, China's got a built-in customer base that cushions it from U.S. economic attacks. Tariffs cut exports? No sweat. Domestic consumption drives over 60% of its GDP now. Giants like Alibaba and Tencent rake in billions from a middle-class 400 million strong and growing. In 2023, Chinese shoppers spent $2 trillion online alone. The U.S., with just 330 million people, leans harder on exports, so when China retaliates with its own tariffs, America feels it more. Beijing's pushing policies to boost local spending, think tax cuts and subsidies, keeping the economy humming even under pressure. The U.S. can squeeze China's trade, but that internal market is like a fortress. It's not just size, it's resilience. China's rise keeps rolling because it's got the people to sustain it. Reason 3. China's state-driven economy. It's a machine the U.S. can't outmaneuver. The Communist Party calls the shots, setting goals like tech self-sufficiency and backing them with cash and control. When the U.S. bans chips, China pumps $150 billion into its semiconductor industry. Tariffs bite, but Beijing rolls out stimulus, $500 billion in 2022 alone, to keep firms afloat. The U.S., tied to free market chaos, can't pivot that fast. Private companies bulk without guaranteed profits. China's state-owned enterprises like Sinopec dominate key sectors, giving it stability under economic fire. In 2024, its government steered 40% of GDP directly. The U.S. might disrupt trade, but China's top-down system adapts quicker than America can strike. It's not perfect, debt's a risk, but this control keeps China climbing despite the war. Let's hit reason 4. China's global trade networks. The Belt and Road Initiative links it to 140-plus countries, $1 trillion invested since 2013 in ports, roads, and rails. U.S. sanctions push China to tighten those ties, not cut them. In 2024, trade with ASEAN hit $911 billion, topping U.S. numbers there. Africa and Latin America lean on Chinese loans and goods, think $60 billion to Africa in 2022. The U.S. tries to isolate China, but half the world's too hooked on its exports and infrastructure cash. When tariffs hit, China reroutes. Russia and India bought 20% more oil in 2023. America's influence wanes as China's web grows. The global south picks Beijing over Washington. Economic war strains Western ties, but China's global reach keeps its rise on track. It's too connected to choke. Reason 5. China's technological ambition. It's a beast the U.S. can't tame. From AI to 5G, China's gunning for the top. Huawei's gear runs networks in 60-plus countries despite U.S. bans. Chip restrictions hurt, but China's $30 billion yearly R&D budget fights back, aiming for 70% domestic chip production by 2025. In 2023, it filed 68,000 patents, double the U.S. total. With 1.5 million STEM grads yearly, its talent pool's unmatched. The US slows it down, cutting off high-end tech, but China's already building its own. Look at Harmony OS, Huawei's answer to Android, now on 300 million devices. Economic war delays progress, sure, but China's not stopping. It's innovating around every blockade to keep rising. Sixth up, China's financial reserves, a $3 trillion safety net the US can't pierce. Compare that to America's $700 billion. It's no contest. Tariffs drain cash, but China props up its yuan and funds struggling firms. In 2022, it dumped $200 billion in U.S. bonds, flexing its muscle. The U.S., drowning in $34 trillion of debt, can't match that firepower. China's reserves let it ride out trade wars. When exports dipped 5% in 2023, it still grew 4.5%. It's not just cash, it's strategy. Beijing's hoarding gold and diversifying away from the dollar. Economic war aims to bleed China dry, but those reserves keep it afloat and climbing. It's got the buffer to outlast U.S. pressure. Reason 7. China's energy independence push. It's breaking free from U.S. leverage. It controls 90% of rare earths, key for tech and renewables. In 2024, it had 24 nuclear plants under construction, aiming for 150 by 2035. Solar and wind hit 40% of its energy mix last year. U.S. sanctions on oil or shipping. China's got options: pipelines from Russia, domestic coal, green tech. The U.S., tied to volatile global markets, lacks that control. China's $300 billion renewable investment since 2020 dwarfs America's $100 billion. Economic war wants to starve China's energy, but it's building its own supply, keeping the lights on and the rise going strong. Eighth, China's population and workforce. It's a numbers game the U.S. can't win. With 1.4 billion people, China's got 760 million workers, triple America's 260 million. Even as it ages, that scale powers its economy. Cheap labor built its rise. Now, skilled workers, 8 million college grads yearly, drive tech and industry. The U.S. faces shortages, 3 million unfilled jobs in 2023, while China's human capital adapts. Sanctions raise costs, but factories stay open, labs keep innovating. In 2024, China trained 500,000 engineers, the U.S. 100,000. Economic war can't shrink that workforce. It's the fuel keeping China's ascent alive. Ninth, China's soft power growth. It's winning hearts the U.S. can't sway. It's Africa's top lender, $170 billion since 2000, and builds schools, roads, hospitals. Confucius Institutes teach Mandarin in 140 countries. In 2023, 70% of African UN votes back China. The U.S. pushes sanctions, but China's aid, $60 billion to Asia in 2022, buys loyalty. Hollywood's big, but Chinese films and apps like TikTok hit globally too. Economic war isolates China from the West, yet the global South picks Beijing's cash over Washington's lectures. Its influence keeps spreading, fueling its rise. Finally, reason 10. China's resilience to sanctions. It's a survivor. The U.S. crushed ZTE in 2018, but China revived it. Huawei lost Google, yet sold 70 million phones in 2023. Tariffs cost $100 billion yearly, but GDP still grew 4.5% last year. China reroutes. Russia took 30% more exports in 2024 and boosts local tech. Sanctions sting, but Beijing's control, subsidies, state firms, absorbs the hit. The U.S. wants to kneecap it, but China's been battle-tested for decades. Economic war slows the pace, not the climb. It's too tough to break. That's it, folks. We've covered 10 reasons China's rise won't stop despite the U.S.'s economic war. What do you think? Can the U.S. win this? Drop your thoughts below, subscribe, and hit the bell for more. Thanks for watching. See you next time.